Hey guys, we're live, and this is the Holy Macro Show on every Friday at 10 a.m. Unless sometimes we do Saturday morning macro, which does happen here and there. Last week was one of those weeks. Um, but anyways, the big thing is I always try to get something together between the two of us. We try to put something together every single week for you guys around Friday. If it doesn't happen because scheduling conflicts and so on, we'll be with you on Saturday. I'm always putting out videos, always putting out posts, so you guys will see us popping up here and there. But we do try to be here 10 a.m. on Fridays every single week. All right, so hopping into this, Kashab, we've been talking about energy for a while. It's been a dud for a long time, just going sideways. A lot of basically trades going to nowhere. I wanted to ask you now that we're kind of seeing, like this morning, I basically made a post this morning. Hey, I want to see a weekly close above this level. We see a weekly close above this level. Maybe we actually have the real breakout that we've been waiting on for a while. I've had some positions still in this space. You've mentioned that you've kind of scaled back a little bit in this space, but you have other things that will benefit from the energy trade. So what are you thinking here? Because I think for me, it's always like, wait for the price to really confirm before going in hard. I only have a few positions in energy. Yes, some commodities, some stocks. I own the sector itself. But Kashop, what are you thinking here fundamentally? Do you think the fundamentals are finally here for this thing to make a move, or do you think it's just another fake out?
So the fundamentals are in place, but here's the thing. So when you look at energy, I mean, energy is a broad space. So even solar is a part of energy. But in general, when we say energy, we mean oil. And when we mean oil, we mean WTI, the Texas Intermediate, that particular contract. No one looks at Brent, no one looks at the other grades. So in this specific context, everyone is looking at WTI and going, will it, permanently sustain above 60? Is it going to go into the 50s, the 40s? And once you start thinking about the 50s and 40s, then the COVID fears come back because at that time, from 40 to 0 was straight down. So then people who were caught offsides in that crash, so they start to get skeptical. And it is the energy trade for me is really not about the oil price. So first of all, even the oil producers, they don't move with the oil price. In fact, this entire market, if you look at how the professionals trade it, they go by inventory levels. Are inventories rising or falling? Now, the problem for the producers in general, or if you look at XOP rather than XLE, is that the inventory levels haven't really dropped. In fact, they have had some unseasonally high climbs. So when you look at that, and then you look at Trump saying he's going to bring Venezuelan oil back to market, and you see all these other things that are going on, people tend to think, okay, if more supply is coming in, this is going to be like shale all over again. And to give a brief recap of what happened with the shale boom. So 2008, Fed takes rates to zero and ignites a huge boom in commodities. So that was when everything went wild. And what happened was because all this money flew into the commodity space and they discovered horizontal drilling, fracking, all these new technologies came in at the same time. There was a shale boom in the US. So back in Marcellus, Utica, all these shales, Permian especially. And Permian, which was considered dead in 2007, had a sudden revival and it became a big growth engine. So when oil shot up to around 140, you had all these producers just drilling, producing. It became a major war between bidding war between market share war between Saudi Arabia and US shale. And the winner, of course, was consumers because oil prices going down brought down inflation. The losers were pretty much all the Permian producers. Now, investors who have been in the space have this memory, and because they have this memory, they are always hesitant because for the last 10 years, it's been a really, really tough trade because everyone has those war stories. Everyone has those stories of their favorite companies going bankrupt. So, in this backdrop, it is very, very hard to get people to be bullish on energy because the people who are bullish on energy, they have slowly just dropped off. It's kind of like with the gold miners. So 2 years back, so I've been in the mining space since 2016. 2 years back, if you told people that you are into gold miners, they looked at you funny because they're like, there's tech, there's crypto, there's all these other things. Why would you look at gold miners? And then when that trade worked, it worked so quickly because no one was positioning for it, no one was prepared for it. And I think something similar is happening with energy here, something similar is happening with oil here. And you just have to be prepared to see that when this move starts, just like what we saw with the February natural gas contract, just like what we saw with silver, it is going to be so explosive because no one is prepared for it. No one even thinks of positioning for it. And that's why it will be huge. But I would still say this is not the time. I would still say this is the time if you are really looking for some value stock with good dividends and you're certain the dividends are going to be paid, then great. You know, if you're buying something like say Ecopetrol or Petrobras or something like that, then great, go for it. But if you're just looking for a giant bet on energy picking off, then I would say you need to hold on. And for me personally, that's the way I have invested. I have one oil producer which also has exposure to natural gas. That's kind of the way I have hedged the trade. And I'm not really big on oil right now. So if we get a drop in inventories, I'm not just looking for WTI above 60. I'm looking for inventory levels to drop across the board. I'm looking for gasoline inventories to drop as well. So when that signal comes, then I'll be positioning bullish on energy.
So let's go to, so you guys know I am long the energy space currently. I did make a call on oil. We did buy a position on that bottom. I'm giving you guys all the charts already, but I want to get through this to get to what, Kashap was saying. So something I'm waiting for here. So once again, I do have some positions. I am not bearish on energy. I'm just not as bullish as I would be if I was seeing everything I want. At the moment, the only thing I'm really waiting on, and this is another thing we can wait. If you're looking at the side like Kashap mentioned, you could wait for that. This is another thing I'm kind of looking at the moment, which is looking for confirmation here. Everybody keeps telling me, there's a possibility, and Kashap, you and I have heard this a bunch. There's a possibility of, and I don't know where. That's almost like these guys are crazy. Hey, what's up, Jerry? I got to meet Jerry this weekend on a trip down there in the chat. So I got to meet Jerry this weekend on what was that? Was that Monday night? So we got to hang out a little bit. Thanks for making it out, Jerry. That was awesome to meet you in person. Great dude. So getting to this, I want to see this confirm. I want to see if energy is actually going to break out. I want TLT to break down. The thing that keeps getting brought up to me and Kashap and everybody else in the energy space is that there's a possibility, and you'll love this, Kashap, there's a possibility that bonds will rally with energy stocks. That's never going to fucking happen. Like it's never, like short term, like so people will send me like, oh, today energy was up and TLT was up. Yes, I understand this can happen in short term, but long term, this is not something that's going to happen with the long bonds. The long bonds, this is 10 to 30-year bonds. They're really priced in inflation and growth. And if inflation and growth are going up, one or the other even are going up, you're going to see the energy stocks move up and you're going to see TLT continue to move lower. And we've been seeing this kind of come up again and again as we look through this entire space. Everybody's talking about it, but if you look at this chart and any of the correlations to TLT, copper miners, anything inflationary, not gold to me is a mixture. So don't you look at gold, but looking at everything else, you're going to see this divergence continue. You're going to see this continue to move lower. You're going to see a breakdown in TLT and that breakout in XLE if this is going to confirm. Now, back in 24, we saw a very similar thing. We had basically a consolidation, a range, a band squeeze, a breakout here. So that was like a new signal. And what happened down here? It didn't make a new low. It did go down for a little while, and then it started to rally right before this thing topped. And so really it was kind of showing you that this wasn't going to go that direction. But I think the way TLT has been under so much pressure, I think the issuance of 30-year bonds being so low, the issuance of any long-dated bonds being so low has put a lot of pressure on this TLT to continue to move to the upside, and it just hasn't. As that continues to happen, I think we're going to have more continuation to the downside. and it's going to look more like global yields going forward. I think I did bring a global yield chart. So looking at global yields too, if we're looking at global yields, it's the same thing. Like we're looking at the 30 years here across the board. Japan, basically Weimar Republic, it's just moving. The bond yields are just moving up like crazy in Japan. It's wild. But after so many years of suppressing bond yields, that's something that's going to happen. And then we look at Canada, that's making a new high recently. We see Great Britain made a new high, came back a little bit, but it's moving up again. This chart is a little bit old, so I think the U.S. yield might even be above this. If anybody can drop in the chat where the U.S. yield, 30-year yield is today, that would be great. Canada making a new high. Germany making a new high. I think that this is going to happen in the United States. At least I would be very surprised if it didn't. And long term, bonds, and once again, you can't trade off cycles. Everybody asks me about this all the time. Like, how do you use these cycle charts to trade? I wish there was a possibility of, getting on here and being like, I'm going to short bonds, like me and Kashab being like, short bonds for the next 40 years. It's never going to work that way. I mean, you could, but there's going to be these look small, but these are huge drawdowns. But this is how the cycle usually works. So you get in these long-term inflationary cycles here coming out of the 30s. Basically, we had FDR do the 1933 gold seizure. Basically, that created a little bit more money in the money supply, which started this bottom out to start to happen during the Great Depression. Inflation continued to move higher and higher, and all of a sudden it exploded in the 70s. Everybody's heard of the great stagflation in the 70s that we talk about all the time. If you haven't, drop it in the chat. Happy to talk about that as well. Thank you, Nick. Good to see you, buddy. And then Nick says 4.83 today for the U.S. 30-year yield. And so basically going the other direction, now we have deflation or disinflation, really. Not technically deflation, but disinflation. We came off of those major highs that happened in 1980, 1982. And then, boom, we moved the other direction for many, many years. This is the area of time where everybody was an idiot. If you just owned the 60-40 portfolio, you made money all the time, basically own stocks, own bonds, and just go, retire. And this is when most of the baby boomers started putting money into their retirement accounts. They made money for many, many years like that. And it was very easy. And then we get to this point, 2020, that's 38 years from the top. So 38 years from the top, we get into this cycle. Now we're in another inflationary cycle. We've been consolidating sideways. I'm still betting this goes up. I've been seeing a lot of people right now, and you've probably been seeing it as well. They're citing that inflation is dead, inflation is dying. I find that hilarious. Now, once again, like if you read the actual reports from the CPI, sure, you could make all types of crazy ass assumptions. You could be a psychopath as well and do exactly what the Fed does. But if you're looking at the actual underlying commodities, and then you say, what is this price going to do? What is this going to do with the CPI? Now, remember, the CPI and the PPI, all the things that the Fed uses to measure these things, these aren't things that you're going to see inflation immediately in. They're going to show up after a long period of time. Think about 2020, 2021. This is a great one that we could talk about a bit, Kashab. 2020, 2021. You start to see inflation tick up in a major way. There's nobody in the world who was sitting there like that was a trader going like there is no inflation. However, the Fed was sitting there throughout entirety of 2021. Now, for you guys that don't know, this is one of my better years as a trader. And it's basically that year, like last year was even harder than 21, honestly, even though a lot of things went up. But 21, I could basically spin around and throw a dart at any commodity stock or any reflationary sector, and everything was going up like crazy. Oil went from what did it sit? I mean, negative really, but the normal spot for oil was probably around $20 back in April 2020. It ended up all the way at $130 by Q1 of 22. And then you look at any of the sugar from copper to anything across the board, any commodity you guys want to name one in the chat. I'll tell you how much it probably went up because it was something insane. Lumber was an insane one. Everything across the board went up like crazy at that point. So what was the Fed doing? Well, they were telling us that inflation was transitory. It didn't exist in the way we were thinking it existed. It would go away very quickly. And then finally they had to change their mind in 22 and raise rates very quickly. So, Kashop, where do you think we're at in that cycle currently? Do you think the Fed's catching on to this? Do you think they're finally, besides Powell? Powell seems like he's kind of on it. Everybody else seems like they want to do something different. Do you think there's a situation here where we think the Fed's going to actually continue to recognize inflation, possibly raise rates, or do you think they're going to look at the data and go, there is no inflation?
I think they look at the data, conclude there is inflation, and just cut anyway because that's what they do. So, like you mentioned 2021, where they said inflation is transitory, and that was a big mistake. But if you go back 2019, Janet Yellen, she gave a press conference, I think it was at the Brookings Institute, where she said, I am worried that there is not enough inflation. So her speech basically said, we have been printing money for the last 11 years, and it has not showed up in consumer prices. Where has that money gone? Well, it went into asset prices. It went into fueling a venture capital bubble, a private equity bubble. It went into carry trades, sending money abroad to all parts of the world. It went everywhere. But her worry was we are not able to create enough inflation. Well, they got their wish 2 years later, created a crazy shitload of inflation. And then what does she say? It's transitory. Everyone said it's transitory. And I remember this was the funniest part of it. I think it was Paul Krugman, a couple of years later, he puts out a tweet saying, if you exclude housing, energy, insurance, all the things that you need to live, inflation is now negative. And it just blows my mind, but that's how they were thinking. And I think they're not that bad now. They know that what they are doing is pretty much destroying the economy. So the K-shaped economy, as it's called, it's already in the mainstream media where it's just these tech stocks, these AI data center guys, they make money and everyone else loses money. And that seems to be fine with the Fed for whatever reason, I do not know. But it pretty much looks like US is going the way of Weimar or Zimbabwe. Now, here's the thing about Zimbabwe. So the guy who printed the 100 trillion Zim note, so his name is Gideon Gono. And if you listen to his interviews, he explains Austrian economics beautifully. He is a fan of Mises. He understands business cycle theory. So when people asked him, why did you print? He said, well, I had no choice. It was a politically right thing to do. So I printed. Even though I knew what I was doing was wrong, I had to do it anyway. And I think Powell and all the Fed governors, I think they are in pretty much the same spot right now. Maybe, US has accumulated so much international goodwill for a long time. So you cannot erode it within maybe even a decade or 2 decades, but it's definitely on that path to getting into another Zimbabwe type of situation. And once you get the next replacement and any holdouts who say no, we cannot cut rates, once they have the DOJ lawsuits on them, and then they start facing the pressure, like you cannot get tenure when you go back to university unless you cut rates or some sort of backroom deals. Once that starts happening, I think they will all cave, and it's going to be another Gideon Gono at the Fed. And that's really what gold is telling you as well. So when you look at it's crazy the way gold is moving, the way silver is moving. Yeah, it's all parabolic. It looks crazy. But why is it moving like that? Well, maybe the market is just trying to tell you that we have gone full Zimbabwe. And when you go full Zimbabwe, this is what happens to gold and silver. And this is also what happens to yields because you can print all the money you want, buy all the treasuries you want, but unless, like Japan, you buy the whole market, you're not going to be able to solve the yield problem. And Japan actually did buy the whole market, and they still couldn't solve the yield problem because the market is always bigger than any single central bank. And that's the lesson I think all the central bankers are going to learn in this decade.
No, I agree. And just for a heads up, thanks for putting this up, Paris. So silver hit $100 for the first time ever. We've been pounding the table on this one for a while. And I've had a lot of people hit me up, and just like Kashop said, like a lot of people have been like, "Oh my God, this looks crazy," and damn, it does. Like I'm not saying, and once again, it's like, do I know the future? Do I have a crystal ball? I don't have a fucking crystal ball. I'm sorry to tell everybody that. But I do know that trends, especially in commodities, have a tendency of doing things like this. And as traders, like, what's our goal here? Is our goal as a trader to kind of come into these trades and catch, a little bit of the move? I want to catch silver from 20 to 30. That's what people do who try to buy bottoms. They're going to catch maybe a little bit of the move. Great, phenomenal. I'm trying to catch the meat of the move. If I even miss 20, I guess 30 to, let's say it hits 100. I've been mentioning this over and over again. Let's say it hits, when it hit 50, let's say it comes back to 40 and stops me out. Great. Let's say we get up to 70 and then it comes back to 60 or 55 and stops me out. Great. Get it all the way up to 100, comes back to 80, let's say, and stops me out. Great. Phenomenal. Here's the difference. I have the upside. Like, I can capture the entire upside of this move. I'm never going to catch it perfectly at the top. So what do you do as a trader? You let that thing come back a little bit and then you get out of it. It's counterintuitive to how people naturally do things, but this is how you're going to make the most money. And really what you're trying to do as a trader is not catch these little moves. You're trying to catch the outlier events. Like, this is why it's so important to understand what trend trading is I'm not sitting here going like, hey, I want to buy energy. Let's say we'll go back to that energy chart and I'll show you this exactly. I want to buy energy and I'm going to trade this range. I'm going to try to buy this low. You're never going to buy it perfectly. So let's say you buy support here or something, you buy here, and then I'm going to trade it to the top end of this range and I'm going to get out. One, you're going to deal with all this chop and you probably would have been out already. So let's be honest with that. Two is you're not going to make a ton of money trading like that. People say, oh, I put options on, I'll do this. Sure, you can try to do those things. It's very hard to do in that type of a time frame. Not to mention that chop would have rotted your options to pieces. But if you're really looking for those outlier trades, buying leaps or something as this thing's breaking out, looking for a major trend to happen, this is how you catch major moves and make major amount of money. I don't care if this one stops me out and comes back to my stop or something down here, and then it's a losing trade. Okay, that sucks. It happened. On to the next one. But taking a couple of those small losses to then look at something like silver that goes from 30 to 100, that's what you're looking for. That's how you pay for all these little small losses. Like, small losses don't mean a thing to your portfolio if you're having a couple of these outliers. Most years you have one or two of these. You have a silver move that moves to the upside in some extreme way, and you're making like a killing because we're in futures, or making a killing on that trade. That could be one trade in a portfolio that makes your entire year. Could give you a 30, 40, 50% return in 1 year, just one trade being that good. And then some years you're going to have many trades being that good, so then you're going to have an even better return. And those best years are when you have a bunch of these outliers kind of working together. This is why I try to understand the cycles. When you understand the cycles, you can get into things and catch a bunch of these things kind of at similar times. So I do think that this is a good start for this. But I do think, once again, the key here is to understand, if you're in silver, you can hold on to it with a trailing stop, or however you're going to do it. Maybe you have a target, whatever. Not my thing, but only fibbers and geniuses buy the bottom and sell the top. Yes. And I thought you said Fibonacci people, and I was like, yeah, that's possible too. But people lie all the time about the fact that they caught the bottom in this. I was in COVID. I caught the crash in energy. I bought it right here on March 25th or something. Nobody did that. I promise you. And Kashaf and I traded through this thing. We were talking every day through this situation. And there was a day I remember writing you, and I was short. I was making a lot of money. And I was like, I don't think I'm going to get any of my money out of this market because it was that scary. So nobody was sitting there like buying the bottom perfectly. Most people would wait for some sort of move higher, start to buy it up here a little bit, which is how you do it well. And not to mention, you probably got stopped right back out. But this was the big move that started, buying something here, letting this thing run. You had that big gap out from this double bottom scenario, and then basically you had this big move higher here. And it's going to be similar here. Is like, nobody's going to think this is possible, and then all of a sudden it's going to be really possible, and everybody's going to be into it, and everybody's going to be loving energy stocks once again. And then when it gets up, basically, let's say $60, they're going to say this energy trade's done. It's never going to keep going, and then it's going to keep going, probably to 100, and then everybody's going to be like, oh wow, I didn't see that coming, and then people start shorting it, hating it. That's when the rally really has legs. So, really, really try to catch the meat of the move here. So, Kashab, looking at this one, I thought this quote was good. I talked about this a little bit this week at my presentation. Control oil and you control nations, control food and you control the people. Henry Kissinger. So I was basically kind of going through the fact of, how all these wars kind of happen. And now we're, what I'm deeming the commodity war. I better write a book on it probably pretty soon, because I'm sure somebody else is going to come up with that. I was looking it up. I was like, nobody's written a book on this yet. But basically, you have all these countries basically trying to buy public companies recently, including the United States, outside of wartime, which is very rare. And now we're doing this in a way that's like really telling me like, hey, they're really trying to control as much of these commodities as they possibly can. They really know something's coming. They really also look at the data centers, look at the energy situation, and know they need a lot more commodities. So, what do you think about this scenario here going forward? Do you think the countries will continue to just pile into the commodities? Do you think also, and this is a question that's kind of odd and a little bit off topic, but something I was thinking about lately, with the way humans are currently with AI, do you think there's a situation here where they need more people to mine and dig and find things like gold and silver, and more workers to do so? Do you think we still have the ability to even do that? Like, it almost seems like humans are really like I'm a very handy guy. I can fix cars, I can fix stuff around the house. Most people can't anymore. And then not to mention like getting people who are specialized in a trade like that. I don't know if there's the ability to find that many workers to do it, which I think would also create a supply issue as well. Have you looked into that at all? Because I figured if anybody has, you probably have thought about this a little bit. I haven't thought about it quite enough yet.
So it's funny you asked that because I was just talking to a friend about he's been on a road trip all throughout Africa, and he was telling me that it's all China there, every part of Africa. So think of it this way. So 100 years ago, it was all under the British Empire. The British, they built the roads, they built the seaports, they built the railways because they needed to get the commodities out of the colonies and to the motherland. And now this is all being done as part of the Chinese Belt and Road Initiative. And what do? They build the infrastructure, they control the mines, they control the output. And why do they do that? Because they own all the smelters, so they are integrated. Once you own the mines and you own the smelters, then you own the finished product, and the world wants that. And unless you play nice to China, well, you're not getting that. And we saw that with Taiwan recently when China said no more rare earths. And then they need the rare earths to make their chips. So what did they do? They pretty much went and begged. And then China's like, okay, we'll let you have it. So they are doing something similar with the silver market. A lot of people say that the rules are sort of changed and it's not exactly out in the open yet, but there's going to be a little restriction on exports. Little, not a lot, but these scary news is what drives the price, because once you say, hey, the biggest producer, the biggest refiner is saying that you cannot have this metal, then what do? Well, then you scramble. And I think pretty much the entire world is going to scramble. And when they scramble, they are going to realize that it is all in Africa. The next untapped resource of anything, it's all in Africa. So when Tesla came up with the mass-produced electric car, where did they get the cobalt? They got it from the Democratic Republic of Congo. And who was mining that cobalt? Well, children. And so when you talk about where will the labor come from, I think it will come from Africa. And where will the capital come from? I think it will come from China. So what do the nations which are aligned in the West, what do? Well, they're going to have to be, well, they're going to be forced to choose sides. And that's what's going to happen. So do you want to be under the play nice with the Chinese so that they give you access to the metal, the refinery, and their supply chain, including access to the ports and everything? Or do you want to play nice with the US, which says, hey, we are going to sanction this country. Hey, we are going to steal your oil. And hey, if you don't use the dollar, then we are going to impose another 50% tariff on you. Hey, if you trade with Russia, we are going to put 500% tariffs on you. Now, when the US says that, everyone's just going to be like, nah, we don't really want this. So I think what this is going to do is it's going to send the dollar a lot lower. And I think that's kind of becoming consensus now. But what it's also going to do is it's going to shape geopolitics in Africa, particularly. Because if you look at South America, I think US has that pretty suited up. So they pretty much control Argentina, they control El Salvador. Now they are vying for control over Venezuela. They have a little spat with Brazil. I don't know how that gets resolved. But either way, they have enough influence to control South America. They don't have that influence in Africa. China has it. So now what happens? So I think that's kind of the other aspect of this commodity war, and I think that's going to be a brilliant book. I think I forgot who wrote it, but there was a book called Currency Wars, which I led. James
Rickard.
Rickards. Yeah.
Yep.
Yeah, Rickards. Yeah, that was a good book. So I think Commodity Wars nails it. So I think that's going to happen, and it's all going to be Africa focused. So if you're thinking, hey, this is too risky for me to invest in a mine in Africa, well, you're going to really miss out on the next 10 bagger and the 100 bagger.
Yes, I think that's it's once again, it's imperative that people get an understanding that you got to invest outside the United States at certain points. There's so many people who just want to continue to buy more US things. Now, once again, not saying it hasn't worked, not saying you can't. I'm just saying you're going to want some exposure to some of these areas. Not to mention, I was talking to a real estate guy this weekend, and he's been traveling all over the world the last few years, and he was talking about Europe. He was talking about Europe being like the real estate's very dominated by China there. He was talking about visiting Asia, Vietnam, going into Africa, South Africa specifically, and so on, and seeing that China is so involved with the real estate and the companies there that it's insane. So once again, it's a understand, like, we're in this kind of global commodities war at the moment. And as long as we're kind of in this global commodities war, we're going to see a situation where these countries might have like, part of the thing why I like price action is that somebody somewhere always knows something. Say this all the time. And then it goes, okay, why is Africa having such crazy performance? So think about what Kashop just said. And then you look at last year, Africa looks really good. I think the AFK is the full Africa ETF. Now, I don't really trade that one. I think it's kind of a liquid, but there's individual stocks, there's South Africa, and so on. There's other areas that you can invest in specifically, which look a little bit better, a little bit more liquid. But if you're looking at all of these, you're looking at, okay, well, this is having really crazy outperformance. And once again, nobody is really talking about it. Nobody's very interested in it. Gold mining guys, like gold guys like us, like we've always known there's lots of value out there in Africa, but we haven't seen the right environment to really see this take off to some insane extent. Usually that means a weak dollar. We didn't see it for a long time. Now we're seeing the weak dollar cycle kind of unfold. We're seeing inflation kind of happen. This is an area that has more resources than just about everybody in the world. Also, Latin America. I remember I just saw this this morning. Brazil's making a nice move. Brazil's breaking out. Basically, look across the board. Argentina's starting to make a move finally once again. Basically, all of South America, Latin America looks really good right now. These are all heavy resource nations. So I think this idea of the commodity war will just continue. And Kashop, you know this one. You're a good historian, so I know you probably know this book as well, which is Zbigniew Brzezinski, The Grand Chessboard. The Grand Chessboard kind of lays out the plans of how to take over Eurasia and get the resources and so on. And I think we've kind of enacted that whole plan basically since 2001, when we started going to Iraq, going into Afghanistan, and taking over more areas inside of Asia. And, we could have a million reasons, like, back in the early 1900s, we were making the world safe for democracy. Then we were, also the British Empire before that, they were talking about saving backwards nations. And then, this goes on and on and on. And then it was weapons of mass destruction. We need to control those so nobody else can. And then that was under the Bush era. And now it's like we went into Venezuela. Why? Well, we needed the oil. Like that was, I mean, granted, like sure, there was other reasons in there, but they did definitely just straight, like Trump definitely just said oil in there, which is interesting and a change. I kind of almost respect the fact that for once we're just getting the truth about a situation. But like this is what we're going to continue to see. I think some of these other nations might be a little bit more stealth about it, but I think all of them are going for oil, energy, any sort of commodities currently. And the reason isn't because like people are going to be like, yeah, it's going to help him and his approval ratings or something because it'll bring gas prices down. He doesn't give a shit about gas prices going down. Come on, give me a break. Yeah, maybe he says that on TV. It makes him look good. It's smart. But at the same time, what's really at play here is much different and much bigger than, hey, I want gasoline prices to go down in the United States. There's a lot of things going on here, possibly like a weird World War type of situation. And it's going to be different than in the past. People always think a World War is in we're all going into different countries with soldiers and so on. Like we're at a very different time. We could fight people in a very different way. And, you see like little cyber attacks happening in the United States. People don't talk about this much, but we have a bunch of cyber attacks in the United States. All of a sudden, everything's down. Every scanner I have, everything's just down. Brokerage accounts are down. All types of people are having a lot of issues recently in the United States with these things, but they're not really connecting it to anything more than, oh, it was some weird hackers out of China. And they're going, oh yeah, weird hackers out of China. It's like, it's probably a government thing, and we're probably doing the same to them, and they're probably doing the same to us, and nobody's going to talk about it. It's not going to be in the news until it's probably too late. So continue to think that there's something going on here that we all will not understand for a little bit of time, but just continue to look at the price action to where you want to put your money, and understand that somebody somewhere knows something, and somebody's investing in these countries outside the United States pretty heavily, which is making this performance not just hey, the US is up 10% and these other countries are up 20. It's the US is up 10 to 20% and these other countries are up 50 to 100%. That's a different type of move that we don't usually see in the international space. So getting to a couple more of these. So if you guys want to see any of those, I can go through that, or send me a message on Twitter. I will send you those, or leave a comment on YouTube. But I wanted to go over a couple things before we have to go. And so, Kashop, when we're looking at this one, so you guys have seen these charts, but just want to also highlight, keep this on your radar. Basically just saying the energy move's probably going to be explosive. And I want to just bring that up one more time today. But I wanted to talk to Kashop about this one. So Rick sends me this, I don't know, a couple weeks ago, maybe a couple months ago. He sends me a CPI chart. I'm bad at time, so I'm going to say a couple weeks or a couple months. I'm not sure. He sends me a CPI chart with MOO on it. And he goes, oh, look at this. Every time MOO bottoms, the CPI ticks up. And it was probably like, I want to say there was a lag of like 2 months, basically. And so once again, the CPI is more lagging than any other commodity. But then I decided to go through and look at some other things. I looked at MOO with copper. Okay, MOO starting to bottom here, and then copper bottoms right after it. Sometimes they're basically linked together. Then we look at agribusiness, and so this is crude oil and the agribusiness ETF MOO. And so we're looking here, same thing. A little bit more of a lag for oil. And this is the first time you see this bottom happen for MOO, and you don't see really a bottom for oil. It continues to move lower. Now, granted, MOO didn't V-bottom this time. It kind of just went sideways for a little bit. And now we're getting new 52-week highs in MOO, so I do think oil is going to probably move with it. But mainly what I want to ask you about, Kashop, because oil, it ain't looking too great just yet. I have a position. It's pretty small at the moment, but I do have a position in crude oil. But looking at MOO, because if you're going to take a bet on one or the other, the bet should be on MOO currently. Are you looking at any of the agribusiness stuff? Are you looking at any of the fertilizer stocks, any of the Archer Daniels, Midland, John Deere, Scott's Miracle Grow. Like, these all look really good. These all look really strong, and they would make sense right now in the commodity cycle. If we're seeing copper moving quite well, we'd probably see the agribusiness sector move as well. So do you have any thoughts on this? Any stocks you're looking at?
So I do have a chemical stock in the portfolio. I don't have fertilizers, and I have tried picking the bottom in fertilizers quite a bit, and I just don't want to do that right now because I look at the demand picture and I was just looking at Mosaic's press release. It's one of the top two, and they say the demand is still not there. Now,
Mhm.
of course, they are hopeful. They are hopeful that this will be the year, but that's pretty much been the case. So since 2023, uh, the agribusiness sector, the fertilizer sector has just been hopeful that, yeah, we are just about to turn the corner. Yeah, we are just about to turn the corner. And I'm not sure we are there yet. I think it's very, very interesting. I think the value is there, especially if you are looking at, say, the staple stocks or something like ADM. Now, ADM personally, I'm not sure if their DOJ investigation is resolved. So until that is cleared out, I wouldn't want to be long the stock because you never know what happens. But other than that, I think this is definitely a space to be looking at. So the processing companies like Bunch or ADM, or if you have exposure to something in the private markets, then definitely. So I think this is the time. It's just probably a few months of waiting, uh, or maybe just a couple of months. I do not know, but I think the bottom is in, but I do not want to call it straight out and say let's get long.
Yeah, I mean, for me, I think the agribusiness, I think if we're the fertilizer stocks in general are not the main part of this ETF. So I'm looking currently at what's strong. And once again, this is the same thing I did in the energy sector, which is looking at what are the strongest stocks inside of the energy sector at first. So I bought things like Baker Hughes, Shell, some international names. That's exactly what I'm doing here in the agribusiness as well. Archer Daniels looks really good. I probably will say that wrong every single time, but that looks really good. That's an area I like. John Deere is also another one I like. But I'm basically sticking to the largest, strongest names currently. Going down the cap scale into a lot of the smaller fertilizer stocks, I'm not doing yet. But if these ones are going to continue to move, those ones are going to move as well. But that's not the way I do things. I always stick to a process. I think that's very important. Everybody has asked about, if I'm buying an energy stock, let's say I'm buying Baker Hughes, big name, service name. If I buy something like that, people then go, well, why don't you just buy this small cap down here that's going to probably quintuple at some point? The answer is that I don't know that. I could be in something like Baker Hughes or some of these larger names, and I could start to get a trend, and then if that really turns against me, it's not really a big deal. It's not going to have something like an earnings drop of 50% or something crazy like that. I'm going to be able to be in these big names. I'm going to ride the trend. And if it ends, oh, well, that's the end of that trade. But if I buy these very small names, I could just have a lot of chop there. I could have a lot of pain there. And not to mention, it's like, what am I betting on? Like, do I want like something that's a high probability bet with a buy signal? Yes. Do I want something with a low probability bet without a buy signal? No. So if you buy bottoms and you're trying to do that, great. Go for those small names. Not my thing. I don't think it makes you much money. But if you buy things that are showing a little bit of strength, showing you that the bottom is kind of starting to start, that's where I think you should be positioned currently. And I think in the agribusiness sector and even the energy sector, I think that's still where you want to be currently. Some of these will move, but like you mentioned, Kashab, like things like XOP are not performing to the same level as OIH, let's say, or some of the big names. So I think you want to just stick to, just like we did with the gold miners. It's another thing. Like you can go back and look through all these videos over the last couple of years and see, like, we've been doing that with the gold miners for years. Gold miners, we started out with the large cap names, then we moved down the cap scale, started to get like, because if you look at it, they didn't have buy signals. So AEM had, I think, the first buy signal, individual miner wise. And then you go down to, okay, now you're starting to see a couple of the juniors started to show up. And then you're getting to the explorers starting to show up, these real speculative names. And so you basically just trade one to the next to the next, and that's the way you run through the cycle. And I think it's going to look the same for agribusiness. I think it'll look the same for energy. But I think a lot of people aren't thinking about it that way right now. They're thinking, oh my God, in 2021, I made so much money in this stock. I like Devon Energy. It's even in a buy signal currently, but everybody seems to want stocks like that, the lowest market cap, the things that can move the most very quickly. And really trading it's a long game. Like, play the game right, play the game the way it's meant to be played, meaning taking the signals you have. Kashop and I might disagree on things, but I respect the fact that he has his the way he does things, and I have the way I do things, and that's the way you trade well. It doesn't mean you got to listen to me and Jason's always right and he knows what he's doing because he's on here. It's figure out what works for you, your personality, your trading methodology, and then execute that to the best you can. So strength begets strength. Yep, exactly like Jack said. Strength begets strength. Momentum begets momentum. New highs mean new highs. Like, I completely agree with that. And so be patient. These will come. And it's just going to take time. So last one. What time is it even? I don't even know. No, we got a little bit of time. Last one, and then we'll answer some questions. So just was working on some stuff this week. Last week, actually. I think I put the post out on Sunday. So basically, this was something I was looking at on the weekend when I was going through charts, and I was like, man, ExxonMobil basically bottoming out with the yield curve every single time. And so we kind of see that extra added momentum happen to things like ExxonMobil when we see the yield curve go into a bull steepening. And so for me, I'm kind of really looking at this to hold up here. If this continues to hold, I think that whole sector is going. I want to see this continue to move up and make higher highs, higher lows. I want this to round out and continue to move higher. Now, this is a new low even, so this is why it's a little bit speculative still. We want to see that relative strength really hold up well, very similar to these times. So I want to keep paying attention to this one. This is a good one to have on the radar, but this also really looks very similar to the yield curve. And I thought this part was uncanny, Kashop, which is like when you're looking at that top that happened in the great financial crisis, and then the yield curve changing shape, starting to move into a bear flattener. And basically, the dollar also went up during this time quite a bit, but also ExxonMobil was in a strong downtrend against the S&P 500. So basically, looking at the energy stocks here is great. And I think there's something to be had. I'm also long a lot of the larger names at the moment, some of the larger names at the moment. But I do think we still have some move to go in a lot of these metals. And Kashop, wanted to ask you one thing. So if we're looking at the metals, have you looked into any of these other mining stocks from anything else outside of gold, silver, that you're thinking is kind of an interesting area for people to look at?
So I have gold, silver, copper, uranium, rare earths, and iron ore. So I'm not venturing into nickel, tin because those are wild markets. I'm not into platinum and palladium because it was just a wild move, and there are basically just two, three equities that you can trade. I like to have a bigger pool of stocks to look at. So that's the reason I'm not in those. I'm not into aluminum. I'm not into steel. I'm not into any of that right now. But then that can change, and especially fertilizers, potash. I am very, very interested. It's just not the right time. So I think if I find something interesting and it doesn't matter what the metal is, I will go for it. So right now I'm on a wait and watch mode, and I have cast a wide net. So I'm open to it. So I just don't have positions in it yet.
No, I agree. I think it's going to be an interesting one, and I think it's important to what you said at the end is to catch a wide net. Catch a wide net and kind of get into that situation where you're not just going like, hey, energy is going to work, I'm going to go all into energy. Hey, I love my gold miners so much, I'm all in gold miners for the rest of the year. continue to venture out of these areas. I mean, that's a real thing that I think, I'd like to say more than anything today, which is continue to venture out, venture into Africa, venture into other emerging markets, venture into futures so you could short bonds, because I think that's going to be an interesting one going forward. Maybe things change in your long bonds. I don't know, but you don't have that ability if you don't trade futures. Venture into currencies. All of these things are going to be making a lot of money going forward. I think currencies could be one of the most interesting trades going forward, just because the volatility has been so low. It has to go somewhere at some point, and especially if countries are all infighting with each other, that's going to be a big one. So let's get to some questions. So if you guys have questions, drop it in the chat. How do you confirm exhaustion? So how do you confirm trend exhaustion? Do you keep it simple with RSI and SMA 20 day? No, absolutely not. So trend exhaustion for me, if people do things like overbought and oversold, I will never look at an overbought and oversold signal and think that's something that I should be trading on. I think overbought and oversold is probably the worst thing that we do as technical analysts. Now, once again, it depends on your time frame. You looking very short term, not my thing. Go ahead and use those things. Long term, I think the best way to do it is really understanding when a trend has changed. So if you're looking, let's go back to something that I can articulate this better with. This might be fine. So when we're looking for something like a trend changing, we're looking at, okay, we have this large uptrend here. So basically you're staying in this range, higher highs, higher lows. And you're going, okay, well, that's simple. Simply put, you could look at it that way. Let's not even talk about indicators currently. Higher highs, higher lows. This thing turns down. It makes a breakdown signal here. That's a lower low and nearly a lower high. So that's when the trend is actually exhausted and you'd be out. You'd be able to catch this whole move. But the problem with most traders, especially when they start trading, is they get into scenarios where they're like, I got to catch this perfectly. I'm going to be out here and I'm going to buy here. And then I'm going to be out. I'm going to buy perfectly there, then sell it here, buy here again. Like it's never going to happen like that. I wish it could. I would love that if that was the case, but it's never going to happen like that. You're going to ride trends. And that's the only way to really make a major amount of money that's going to really pay for your whole portfolio. You'd be out at a lower high here. So you can quantify that in different ways. So quantifying it meaning something that's more repeatable than just eyeing it up, which is saying, okay, I'm going to wait. I'm sure this is a 50 or 100-day low has happened here. Somewhere between 50 and 100 days is a good low signal to tell you where a trend has changed. 50 days being the shorter term end of that. I would say do that. That probably got you out about here. Buying a 100-day high would probably get you in here. Selling a 50-day low would probably get you out around here or here. Not sure exactly without looking at that indicator, but that's something to think about. You could also use moving average crossovers. Some people, short-term traders, could use a 10 and 40. That's a very simple way to do it. So use a 10-day and a 40-day, meaning like when they cross, you'd buy, and when they cross down, you would sell. That's a good short-term indicator. There might be a little bit more chop with that one, but that's another way of doing it. But just looking at something and being like, silver is up to $100 and the RSI is very high. The RSI on silver has been the highest RSI in many years for a very long time. I mean, I'm talking months, and nothing's changed. I love when I buy something and people like who follow my trading, because my Substack follows the trades I actually do. And so looking at that, they'll be like, why are you sure you want to buy that there? And I'm like, yes, I would like to buy that here. I really don't give a shit. Like, it doesn't mean anything to me that it's gone up a little bit. That's proving me my thesis is right. And so I'm going to buy it, and then I'm going to wait for that trend to change on another signal. So using these kind of long-term trading strategies is going to make you a lot more money. So anyways, we got time for one more. So all seem like technical questions today. Oh, that was Nick. Okay. How do you approach creating profitable entries and exits? Do you keep it simple with technical analysis, or do you follow a step-by-step process? So technical analysis is always, for me, it's the way to go. And even if you look at it like some people would say, like me trading systematic is quantitative. I would say that's could be true, sure, if you want to say that, but quantitative analysis and technical analysis is the same thing, really. You're looking at different ways of quantifying price action, which is the same thing we do as technicians. So for me, I'm always looking at the same exact process every single time. I know where I'm getting. Every good trader will tell you this is the best thing I can say, because it's like everybody has a different way of doing things. But every good trader, Kashop and I will tell you, we know where we're getting out before we're getting in. That could be a price action signal for me. That could be something different for Kashop. Kashop, I'll let you answer that, and then we probably have to go.
Yeah, so for me, entries, there are two ways. One is I just buy value, and if I'm buying value, I look for those falling knives. I want to see some kind of bottom, or if it's a small cap, then I don't care. Because for a small cap, most often what happens is I get a exit through a corporate acquisition. So it doesn't matter what the technicals look like, I just buy in. If it's a large cap, then yeah, I kind of look for some kind of exhaustion, on balance volume, something to tell me that maybe this is a good place to get in, or else I just scale in, and that way I don't have to worry about it. And in those setups, I give them a lot of time. So if I'm buying value, then it has at least a year to run. If I'm buying something as a shorter term trade, then absolutely for me, it's the technicals. Uh, that's my way of doing it. As for exits can be valuation, because if something is too overvalued to justify holding on, then I just rotate out into something else. It can also be relative valuation. For instance, I had a small cap miner which was valued higher than Newmont, and it didn't have as much upside. So in that case, I would just say let's switch out of the small cap miner and the risk that we are taking. The other exit, of course, is sentiment. You know, when you get a blow off top, like we saw with crypto. So I sold. I had a big trade in Solana from 2023 to 24. So I rode it from somewhere around $11 all the way to $220. So it was a crazy trade. So at that point, I just said, hey, you know what? This is volatile. I'm done. I'm just getting out. So it can be something like that, but that's rare. For me, the most common way of getting out is the valuation, the relative valuation, or the sentiment.
No, that makes sense. All right, guys, we're gonna get out of here. We'll see you guys next week. I have this feeling, and I didn't. Kevin hasn't said anything to me yet. I don't know if he'll see this even today. But if you have a feeling Kevin's gonna hit me up, because Kevin usually has something to say, and I usually have an inkling of that, because it's usually very similar to maybe Energy's making a move. We did talk about that recently. So Kevin might want to come on this weekend. So you guys might get another video this weekend at some point. Just want to let you guys know today. All right, guys. We'll see you guys next week on Friday at 10 a.m. Eastern Time. Thanks for hanging out with us. Appreciate you guys hanging out. All the questions were great. Comments were phenomenal. So please jump in the conversation. We love hearing from you guys. We'll see you guys next week.
Bye, everyone.